we're not far from a lot of big banana plantations in different islands. So that's a decent sized banana, but that's the start, right? Because generally speaking, post-election year, what we would call crypto fall or crypto autumn tends to be very strong. So it tends to be very strong. The macro backdrop is obviously very good because of deregulation, new government, all of that stuff. So we've got a good setup. It's gone far and fast. I think everyone's a bit PTSD'd still, so which is why I err towards it probably has one more squeeze because so many people think it needs the correction now. But, I hear your point of view too. So I'm not, saying it has to be one or the other, but that's my view. It goes up first. Everyone thinks, oh, it's fine. We're at 110. We're getting 150 now. And then it corrects in everybody's faces quite sharply.
Bitcoin has recently been experiencing a significant rally, with its price surpassing $97,000, marking an all-time high. This surge can be attributed to several key factors, including growing concerns about liquidity in the broader financial system, a strengthening US dollar, and increasing institutional interest. The rising adoption of Bitcoin by mainstream financial players, such as investment firms and hedge funds, has further accelerated its value upward. As more institutional capital enters the market, Bitcoin's appeal as a store of value and hedge against traditional financial instability continues to grow. Many analysts and market participants speculate that this bullish momentum could continue shortly, with Bitcoin potentially reaching even higher price levels. Despite the optimism surrounding Bitcoin's price performance, renowned economist Raoul has issued a word of caution, warning that a significant market correction could be on the horizon. In a recent interview with Rand Nearpal, Powell predicted a sharp pullback in Bitcoin's price, which he believes could surprise many traders. While he acknowledges the strength of Bitcoin's current upward trend, Powell cites factors such as market volatility and potential regulatory changes as key risks that could trigger a sudden reversal in price. He highlights that while the long-term outlook for Bitcoin remains promising, short-term fluctuations may present challenges for those heavily invested in the cryptocurrency. Supporting this cautious view, economist Carl Menger commented that Bitcoin's current rally may be just the beginning of a larger price surge, but also warned that it could face headwinds in the short term. A chart shared on the social media platform X further reinforces the bullish outlook, with the monthly Relative Strength Index, RSI, showing strong upward momentum. This suggests that while a pullback is likely, the broader trend for Bitcoin remains positive. As Bitcoin continues gaining traction in retail and institutional markets, understanding the interplay of market forces and potential regulatory shifts will be crucial for investors navigating the evolving cryptocurrency landscape. If you want to stay updated and understand what the top Bitcoin and cryptocurrency investors and leading thought leaders of our time are thinking, don't forget to hit that subscribe button and turn on post notifications for more videos like this.
I'm going to show you the chart because this chart somebody's stolen off me. They're putting it around on Twitter and they've changed the time horizon. Let me see if I can find the chart. So this is the chart that people are using.
Okay, let's get your chart out. I want to try get. There we go. Yes, global money supply, right. M2.
Yeah, that's the one that's going around Twitter right now. But the person who put it up copied our chart, but he used, I think, an 8-week or 8-week lead. We think the best fit is the 12-week lead. Now, who knows who's right in this, right? This is we're all fitting patterns and hoping it works. But generally speaking, for me, this is a rerun of 2017. It's very similar. And that peaked out end of deck, fell 35% in Jan for like 3 weeks and then rallied. So your hypothesis, I think, is right. I actually think it probably gets to the kind of 110, 120 first. But, it's pretty 50-50 which chart works. But really what it's saying is liquidity, because of the dollar going up ahead of the election, because of rates going up ahead of the election and the fears about Trump and fears about tariffs and stuff like that, that what was causing that issue, and that does lead crypto prices. Yeah, it's tightening financial conditions. So that correction was the strength of the dollar. So money supply is increasing, but it was being offset even more so by that recent spike in the dollar, which I think is reversing now. I think Scott Bessent being put into the Treasury is likely to believe in a weaker dollar, likely to believe in lower rates. Yeah, firstly, 2016 Trump, exactly the same happened. The dollar went up and rates went up. January, they all reversed. And they continued down all of that period. So we need to go back to 2016.
That's over here.
So there you go. Right. So what happened is 2016, we had that spike. Then it came back down for the rest of 16 and then eventually spiked later from 18 onwards. So, that was perfect. Very similar kind of setup. Not identical looking, but same idea. Scott Bessent, somebody I've known for 20 years. He was a macro hedge fund guy. He's been to my house in Spain, that kind of stuff. I've known him for a long time. Scott gets the picture, and if he wants to stimulate growth, which is what he said, the most important thing to try and pay this debt cycle off is to increase growth. And then he talked about a weaker dollar, and he's talked about lower rates, and he's talked about lower oil. All of those things say he wants looser financial conditions. So if that's the case, that's good for us and our bags, essentially, in translation. We're not far from a lot of big banana plantations in different islands. But so that's a decent sized banana, but that's the start, right? Because generally speaking, the post-election year, or what we would call crypto fall or crypto autumn, tends to be very strong. So it tends to be very strong. The macro backdrop is obviously very good because of deregulation, new government, all of that stuff. So we've got a good setup. It's gone far and fast. I think everyone's a bit PTSD'd still, so which is why I err towards the it probably has one more squeeze because so many people think it needs the correction now. But I hear your point of view too. So I'm not saying it has to be one or the other, but that's my view. It goes up first. Everyone thinks, oh, it's fine. We're at 110. We're getting 150 now, and then it corrects in everybody's faces quite sharply.
Bitcoin's recent price surge has captured the attention of investors and analysts alike, with the cryptocurrency hitting impressive new highs. While some experts are bullish about Bitcoin's continued rise, others, such as renowned economist Raoul, remain cautious. Powell suggests that while Bitcoin may continue to climb in the short term, a significant correction is likely. Drawing from historical patterns, he believes that the digital asset could experience a sharp pullback, potentially losing as much as 30% of its value quickly. This prediction is rooted in the volatile nature of Bitcoin's price history, with similar fluctuations observed during previous market booms, particularly in 2017. The potential impact of regulatory changes on the cryptocurrency market further compounds Powell's concerns. The regulatory landscape is increasingly seen as a decisive factor in Bitcoin's future trajectory. While clear regulations could provide the market with much-needed stability, any abrupt shifts in how Bitcoin is treated by governments, particularly in key markets like the United States and Europe, could introduce significant volatility.
The first part is they need to get growth up, right? That's thing number one, because they can't tighten fiscal policy by reducing the deficits and stuff until they've got growth going, because that will slow it down otherwise. So they need to get rates lower. Now, obviously, the Federal Reserve is supposed to be independent, but they're going to try and force something to get liquidity and growth up. If you think of the ISM survey, which is the business cycle, still below 50, which says the economy is not really growing very strongly. The services sector is growing a bit better. The manufacturing is not growing at all. So they're going to have to goose that for a bit. A weaker dollar, lower rates, injecting some liquidity into the system. Then it's going to take time to negotiate tariffs and what the outcomes are. The Europeans are already going, well, maybe we'll play ball with you a bit more. And the Mexicans have done the same. So, I think we've got that. Also, I think Trump, one of the first things he will do in the first 3 months is try and resolve Israel, which we saw and I think my view has always been Iran in the background has been agreeing to whatever's been going on. I think Putin and Ukraine will get resolved. So a lot of the dollar premium, risk premium comes out, oil premium comes out, oil can drop lower, the dollar can weaken just because geopolitical tensions go down. So that's what I think the first order of business is: get this stuff out of the way, get things feeling better, get the economy moving, then start cutting government costs, which takes time, via deregulation first, and then via figuring out how can you save costs. And then there will be a broader implementation of tariffs, but that takes, even Scott Bessent said, we can't rush tariffs. It has to take time and has to be thought through. So that's more likely a 2026 thing, which is usually the back end of the cycle anyway when liquidity is coming out. So you can see the pattern of liquidity and then liquidity coming out as they really start stripping out government spending and they really start tightening up on tariffs. So we've just had a huge rise in the dollar. That tends to lead to lower inflation.
Yeah.
We've had oil prices at the bottom end of the range, and the US administration says they want to pump more oil and they want to get oil lower. So that's unlikely to be inflationary for the time being. China is on its arse, so they're not buying commodities, so it's not very inflationary. Europe is the same, so it's not very inflationary. Wages keep deflating, so it's not very inflationary. So I think it's just noise in the data.
While Bitcoin briefly reached $99,000 in late November, it retraced to the $96,000 to $98,000 range, highlighting the challenging journey to the coveted $100,000 mark. Powell's longer-term forecast, however, is even more optimistic. He suggests that the $110,000 peak could be just the beginning, with Bitcoin potentially soaring much higher in the coming months. But as the excitement around Bitcoin's potential builds, the big question remains: are we truly on the brink of a Bitcoin revolution, or is this just the calm before a monumental crash? With so many factors at play, including regulatory concerns and market volatility, only time will tell whether Powell's bold predictions hold true. We'd love to hear your thoughts on Powell's analysis in the comments section below. Also, ensure you like this video, subscribe to the channel, and if you want to know more about how government policies are impacting Bitcoin and other cryptocurrencies, then you have to watch this video next.